One.
All right, guys. Hey, everyone. Welcome to the session. Just give me a second. Let me mute this so that we don't get any feedback. All right, awesome. All right, how's everyone this evening? Uh, I am not in my usual desktop, so if there are any difficulties, technically, just do forgive me for this week, especially. But how's everyone? If you can just type a one if all good is with you in the chat so I can know you guys are here because we'll be going through a number of charts today, given the market action that has happened over the last two trading days of the week. So just type a one, all right, if you can. Um, Inside the chats, just let me know you're there and you are good to go. All right, great. I see the ones coming in. Awesome. All right. So just a quick indication in the chat, guys. How was Thursday and Friday's trading for all of you? Just just quick description, how things are or how things were on Thursday and Friday. I know it's quite rough for some guys who traded certain markets, but yes. Any you know anyone want to write well how their sessions on Thursday and Friday were? Just quickly write it in the chat so I can just kind of know where you guys are also in your trading, and then I'll start quickly on the broader markets. All right. Having said that, okay, some announcements as you guys type in the chat. Four things before we start. Just a quick notice that our first 30% discount code ends tonight. All right, at 2359 UTC time. So if you haven't taken advantage of that for a challenge, do take advantage of it today. Next, there are a couple of impersonations already that are happening for us in Discord and friend requests that are suspicious. Do note that I have not sent anyone any friend requests. If anyone has DM'd me, I have responded to back quite directly with regards to the issue you are facing, mainly around the C Trader logins. All right, so please don't click on any suspicious links. Again, these are very vicious phishing scams that lead to social engineering scams. So please be very careful. All right, if you see any links shared with you, I don't share anything about how you can make extraordinary profits with regards to following certain systems. All right, and I think inside all the chats that I've had with you guys probably also know by now, and I'm mature enough to know by now that there is no secret formula to trading. All right, it's about your execution and your risk management together with your strategy. All right, next, your C Trader logins for your competition should be in. Okay, late entries will be entertained until the 12th of June. Um, New York close. Okay, so please do note that. These naturally, sometimes some of you have formed pods and you have members that come in late, they want to join the competition, they can do so until the 12th of June. Finally, also, we have Thursday midweek sessions coming up. These will be slightly shorter than our Sunday sessions because obviously the market is open. So we'll be keeping them short, probably about a 20-minute session at most. Okay. Sundays are when we will go over the markets over in bigger detail. We'll have a little bit more time to go through charts like we did last week. All right. Awesome. All right. So with that, let's start. Yes. So rough week last week for the S&P 500. Again, the weakness started really on Thursday, and then it really accelerated into Friday, as you guys know. And the main guys that were sold off were the guys who were leading, which were the tech stocks, AI names. Again, the narrative is not new. It's about how inflation is sticky and now interest rate expectations of a rate cut are off the table. All right. So previously, just to help you guys remember what the big picture was, the big picture was that whilst inflation was sticky, the labor market was weak. And you got to remember that the Fed has a dual mandate, which is the labor market as well as stable monetary policy, all right, or a stable inflationary environment using monetary policy. So initially there was a case for interest rate cuts because the job cuts or because the job losses were getting quite serious, all right, and that's why Powell cut last year. This year, however, with that last jobs report, which was, I think, the third best in the last 18 months. Essentially, now interest rate cut expectations are supposedly off the table. And of course, we proceeded to see the market sell down. All right, so that's the macro backdrop. It does affect certain assets a little bit more. However, from a technical perspective, as I did say on the Thursday session with Sean, as well as the week before, there are enough waves in place for a top. What we were looking for is the 9 EMA crossing over the 21 EMA. All right, and that happened already on the 4-hourly chart, happened on a Friday, as you can see here. And as you can see, once it got below, it really started to accelerate. All right. However, you have to bear in mind that we are up in almost a straight line, close to 40%. All right. From the Iran war lows. There were negative divergences building. People were getting a little bit exuberant. So a correction like this is very much welcome. All right. And I would say in terms of the broader scheme of things, we need to zoom out a bit just to see how far we've fallen. And you can see like, okay, like, hey man, this is like painful, but it's not the end of the world yet. All right. Having said that, as we can tell, the moment the market started to sell off, you can tell that the Trump administration was all over it. First, we had Kevin Hassett, the new Fed chair. He started coming out very quickly and saying, hey, a good jobs report doesn't mean that we will have interest rate hikes. All right. Having said that, it's important to note that the 2027 interest rate futures are pricing in a potential interest rate hike. I think it's something about 60% probability now with regards to an interest rate hike in 2027. All right. Whether that actually sort of like takes hold remains to be seen. Okay. With regards to post the market, actually, what was interesting was that Trump actually did say that his administration was considering taking stakes in AI companies. All right, and we can see that that is definitely aimed at the largest components within the space or within the index, and that is hoping with a hope to stabilize the market on, I guess, Monday. All right. Having said that, do bear in mind that these sell-offs, the way it sold off on Friday, all right, is indicative that that we may see a little bit more downside up ahead. But having said that, I've often seen markets cut short their downside consolidation. So you do bear in mind, like, as much as this is pulling back and it's painful, it is a pullback, and it is, as far as it looks right now, still an opportunity to add on a dip. All right. So again, all views here are my own, and this is not financial advice. So do your own research. And okay, with regards to where we are, okay, hope you guys can see this. I'm gonna enlarge the chart a bit. Okay, so very big sell-off, but we're right at the support line here. All right, the 7370 level. All right. I am expecting on Monday at least some sort of a bounce with regards to the S&P 500 futures. How high the bounce goes remains to be seen. Okay, just as a guide, this could actually go all the way back up to the highs here and come back down towards the box here. This would actually be a perfect consolidation or end of correction zone here, which is between the 6994 and 7144 level. All right, on the ES. That will be a perfect end of correction and consolidation zone if we actually bounced up and came back down. So just bear in mind that we could actually move down that much. All right. Now, there is also another alternative, which is a bullish alternative that we often see in the market, and that is a sideways consolidation, all right, in a wedge pattern, all right. You can see blue line here, could go sideways up and down like this, and then tightening up into a wedge before a breakout, all right, to the upside. Okay, so this is the ES, all right. So just bear in mind, don't get overly bearish, but I would say don't be too quick to rush to add your positions in. Watch for some signs of a bottoming first. A lot of people could argue that, oh, the panic's in already. Maybe. All right. Just kind of watch Monday for some signs of a bounce, and then see if you get another flush before you take a bounce position in the market. All right. Or at least you want to see this really come off the low. All right. Pull back and then play for a move, short move to the upside. All right. We said that. All right. Let's move to the NASDAQ. All right. So again, not too bearish, but just cautious around the edges. Cool. I'll get to crypto, so guys, don't worry. All right, NASDAQ, same thing. I did point out during Thursday seminar that on the 4-hourly chart, the 9 was crossing the 21, and that was also a warning sign. All right, and that, as you can see, started to play out. Again, I just want to reemphasize, this is a good place if you were long from the lows or long from levels that are lower, but after the Iran war lows to actually start closing some positions. All right. But to actually catch this selling wave, not so simple. Yeah. Having said that, as you can see, I've mentioned the 9 and 21 a lot. This kind of selling where you have 6 hours straight of hourly red candles is indicative of institutional selling. As you guys know, hedge funds run in pods today. Pods have volatility risk budgets, have market factor risk budgets, and have drift budgets on top of returns that they need to produce. So some of them are just trying to preserve some of the gains they've made. Just bear in mind that for a hedge fund pod PM, this is essentially job preservation, all right? So sometimes they'll just dump. But it also means that when it bottoms and it comes up, you get a move like you got from the bottom in the Iran war, all right? That's just how they move, okay? The pod shops are the biggest players in the market right now. So you will see very quick moves to the downside and then very quick moves to the upside. This is absolutely normal in today's environment. And that's what's changed about market structure as of, I would say, in the last 5 years, when pod shops really became a force, or the biggest force in the stock market. All right. And as I mentioned, similar to the S&P 500, we could get a bounce that could even get back to the highs here, possibly. Less likely scenario in red, and then to this box here, all right, which is between the 26916 level and the 27822 level. All right, so this is where we are looking at for the NASDAQ. All right, so again, whilst we sold off, don't get overly bearish, but don't rush to go in. Watch for some signs of a bottoming. If you are looking to play on the long side for the NASDAQ and a bounce, one thing you could do into the competition is with your CFD side, go along the Tech 100 and then short the S&P 500 in equivalent notional size. Play the spread, expecting the tech bounce. All right. When you do that, you're actually playing for tech outperformance. This is similar to the gold-silver ratio spread. So this is something that you guys can note, and you guys might want to watch for on Monday, especially when the competition starts trading. All right. However, index trades, try to not put them on too early. Put them on. The best time to put them on is somewhere around 10 a.m. London time. That's usually when the futures market is more active, and also the CFD pricing for indices tend to get a little bit tighter. All right. Next. All right. Let's just look at the IWM, which is a small cap index. All right. Just to get an idea of where things are. As you can see from this, all right, I've mentioned many times before, when you have an interest rate scare, all right, you can see the Russell 2000 gets affected disproportionately. Okay, this is quite standard when interest rates are scaring the Russell, scaring the market. As you can see, this was actually consolidating consolidating quite nicely with regards to a sideways pattern. All right. Having said that, all right, when it breaks down the way it does, this is indicative of an interest rate scare. How far can this go? Likely, I would say the first target would actually be this level here, the 272 level. Do note that the Russell resolves a little bit slower than tech and the S&P when it comes to moving back to the upside. All right, so if you're trying to play bottom fishing, especially when it's due to interest rates, be a bit more cautious around the Russell 2000. All right, having said that, okay, let's go to the 10-year chart. So these are 10-year yields, all right, as a guide. So we had a bit of a spike in 10-year yields, but nothing like the Iran war, all right, where we had a lot to worry about. So again, just to put things into perspective, yes, there's an interest rate sort of like cut removal expectation, but yields on the 10-year are not spiking, all right? So in terms of panic, the market is not in full-blown panic mode. If it was a full interest rate panic mode, you would see this going to the 4.8% level to the 5% level. Having said that, again, because of a lot of pod shop unwinding, let's just keep the VIX in mind. All right. So as you can see, the VIX actually spiked 39%. All right. On Friday. I just want you guys to note that there's only been 3 times in history where this has happened, and 2 out of the 3 times the market actually ended higher. One was in 2024, August 24, the end of the yen carry trade. VIX spiked, and again within a month the market was higher. The second was, of course, last year the VIX spiked again, and within a month the market actually went higher. The one time that the VIX did a spike of over 35%. And the market continued to fall was actually during the financial crisis, when the market was first warned about subprime, and then the subprime crisis actually played out. All right, right now we don't have a subprime scenario. We have an interest rate change in expectation scenario, and whether that continues to become a major theme in the market remains to be seen. Also, do note that some of the overhang is coming from some of the mega IPOs that are coming up. SpaceX, Anthropic, and all these guys are going to add a huge amount of supply to the market. Okay, so just bear in mind that you do have this scenario, or this sort of like potential overhang fears that are on the back of everyone's mind. All right, let's move to FX. Favorite pair, dollar yen. Okay, so where are we? Sorry, this is the wrong dollar yen chart. Just see if I can get chart. Yes, there we go. So as you can see, we were saying that, okay, this would likely continue up towards the 160.5 level. Took a bit of time, but it resolved and started its resumed disruption to the upside. Again, this is a carry trade, but once you hit 160.5, again, do expect the Bank of Japan to start its rhetoric again. And again, just a reminder, if you are playing for interventions, be very, very careful, because when the Bank of Japan has intervened at one level, usually the next time they intervene, the level is also significantly higher. All right. So don't say, okay, the Bank of Japan intervened here at 160.5, they're going to do it again. They don't. There's also a change in the way the Bank of Japan has been intervening recently with regards to dollar yen strength. They tend to like to do it around economic data. Just bear in mind that central banks talk to each other. They know all the economic data before you do. They plan the intervention. I have seen interventions happen right after non-farm payrolls, where the moment the non-farm payroll number came out, the market came to the downside. The Bank of Japan went in and hammered the market all the way down. All right. Cool. So this is dollar yen. All right. Let's go at dollar Swiss. All right. Dollar Swiss again. Let me just, sorry, wrong dollar Swiss chart. Okay, cool. As mentioned, this was my favorite carry trade chart. I was looking for the 80 level. Okay, on the dollar Swiss, this continues to look like a stock market, look like a cup and handle. All right, in the broad scheme of things, that is ready to take off. And again, I'm looking for the 80 level, all right, this level here around the 80-10 level, all right, to really break. And then if we can break to the upside on that 80-10 level, we should see the dollar yen move significant, dollar Swiss move significantly higher. Just bear in mind that the dollar Swiss has a negative swap, which means that you are paid to actually stay long the dollar Swiss. All right. So again, this is a carry trade currency that you want to keep an eye on. All right, let's go to gold, and then we'll go to crypto, and then we'll cover some stocks. Cool. All right, gold. So again, gold, reminder that we, could see this move down towards the 4271, 4229 level. Initially, I thought this might go a little bit higher, push up to the upside. I guess that's not going to happen. Downside measurements towards 4271, 4229 level before a push to the upside. But again, as mentioned in Thursday's session with Sean, a lot of guys are looking for gold-silver ratios. So this would be a good time to actually do gold-silver ratio trades versus trying to do a mean reversion on gold itself. All right. So gold, just also do note that Chinese liquidity has been tight. So central bank buying of gold has slowed down a little bit, which is why gold is not really seeing a lot of support with regards to this downside move at present. All right, Bitcoin. So Bitcoin, this one has been a heartbreaker for many. Crypto has been especially hard hit. Just bear in mind that crypto is on the extreme end of the risk asset curve. Anything related to interest rates that imply a higher for longer rate cycle or a hike in interest rates affects crypto disproportionately. Initially, I was saying, okay, I was thinking 62,707 could bounce. And I did also mention during the Thursday session with Sean that crypto likes to wick below support and then bounce or do what you expect it to do. This might be what's happening, all right? So you can see on the 4-hourly chart, wicks below support, all right? But then you can see here the 9 is starting to cross back over the 21. So let's see. Maybe Monday, this starts to move back to the upside, all right? This is just over the weekend because crypto trades 24/7, all right? But if we get a follow through, all right, I'm looking for levels towards the 68,000, 70,000 level. Having said that, if we do achieve that 68, 70, or 70,000 level, please be very mindful that crypto is in a structural bear trend right now. All right, I would, if you are caught long, I would consider pairing positions at the 68,000, 70,000 level because I do see a lot of structural challenges with regards to having crypto continue to move to the upside. Again, for crypto, if you're trading it during the competition, ETH BTC is a pair that can be traded in the competition. All right. Now let's move to ETH. All right. Unfortunately for ETH, just like the rest, all right, we are seeing support here, break. But I do expect ETH to break back over support, but get back to about 1850 to between 2000 level. All right, somewhere around here before continuing the downside. Again, Bitcoin and ETH, majority of trades or majority of trading volume is in Bitcoin and ETH. But even they like to wick below and again try to fake you out. All right, so let's see if we get a follow through on Monday, 1850 to 2000 level. Again, at those levels, if you are long or you're playing for a bounce, that's probably a great level to look at pairing your longs or exiting. And in terms of ETH BTC, whenever crypto tends to bounce, ETH tends to move a little bit faster than Bitcoin. So again, do look at long ETH BTC as a potential bounce play into Monday. All right. Okay. Equities. Now, semicons obviously very hard hit. All right. So we're going to go to the big guys first. We're going to go to NVIDIA. All right. Having said that, as you can see, NVIDIA. All right. This is actually a corrective pattern at ABC. Okay. Now the question is where NVIDIA could actually end its entire correction. We are looking at levels that are potentially in the somewhere between the 204 to 193 level. These are levels in which NVIDIA's correction could end. This box here. All right, I'm not sure if you guys can see it. I could just enlarge the chart a little bit. All right, so you guys can actually look at it. I'm expecting the market correction if it continues to push lower, 193 to the 204 level. Having said that, NVIDIA has at the 204 level enough in place to actually complete the correction already. So I wouldn't get overly bearish. I would actually be looking for buy on dips for NVIDIA at this point in time. All right. Now let's also cover AVGO, another crowd favorite. Okay. So AVGO chart looks a lot worse than NVIDIA's chart. All right. It broke key support, broke a key consolidation high type flag here. Okay. And is continuing to dump to the downside. In terms of where this could go on the overall, all right, I would say in terms of levels where you can start adding very, very, very slowly or starting to buy in, let's just see where we are. In terms of the Fib retracements, let's just adjust this so it's a little bit more precise. Okay, so if we were to look to start accumulating, actually, this would be an indication you could start accumulating around here down towards the 370 level. But again, you might want to just do it really, really slowly because just bearing in mind where the broader market is at this point in time. Okay, so just bear in mind that for AVGO, chart looks a lot uglier, but it is quite near a level which you can start actually accumulating. All right, 200 days at 354. This is going to be a level which the market is, sort of going to test potentially in the sell-off. So just if you are looking for long positions, very, 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 very slowly accumulate. You can start accumulating around this zone here. All right. All right, let's go to some of the other semi names. AMD, we'll cover Micron. Okay, very similar picture for AMD. Again, not a lot of technical damage, as you can see, to with regards to the uptrend. Looks like a very standard correction still at this point in time. All right. In terms of where this could go. All right. So let's draw a few lines here. Okay, and down to the bottom here. Okay, so probably looking at potentially visiting the 400 level. Again, all these are tickets you can trade on the Veridium equity platform. Wouldn't get too overly bearish on this name. Having said that, just be a little bit cautious. Watch the broader market as you are also looking at these charts. All right. Now, let's move to everyone's favorite Micron. All right. Very similar picture. I wouldn't worry too much. This is broken out as long as this stays over this base, this risk low here, which is at the 648 level. This is bullish. All right. Having said that, there is quite a bit of damage done on this breakout, but it is a pullback as far as technicals are concerned. All right. I am looking for selling exhaustion as well on this name. SNDK would probably follow a similar picture as well. All right. So I'm looking for accumulation right around, sorry, just give me a second. Okay. Yeah. So it's already started to hit the 50% of this pullback. So around 822. And I would say I would not risk beyond, if you're looking for long positions, this breakout point here, this episodic pivot breakout point. So around 782, I would start looking at potentially putting stops in for Micron. All right. Oh, sorry, 780 level. All right. So just bear that in mind. Still bullish on the overall. Bigger trend, still bullish. Having said that, just bear in mind that broader market is still in correction mode. All right. With that, we will cover some of the software names. Again, SpaceX IPO is coming up. I just want to help everyone bear this in mind, all right? They're asking for a $1.7 trillion valuation, or 1.75, I think, dropping on the 12th. All right. Amazon trades around a $2 trillion valuation, but has close to 10 times the revenue. All right, 700 billion, if I'm not wrong. So there are some really good names in the market which could see institutional accumulation very soon. Amazon being one of them. All right. I would say for Amazon, do look for this looks like a very nice chart in terms of like where potentially we could see accumulation start to occur. There is enough in place here, and you can see here 245 is a very nice level. You could see, quite a bit of buying in this zone here. So don't be surprised if Amazon starts to go sideways from here. All right. Amazon is going to be one of the major providers of cloud services for the AI era. It is very hard to see them losing as AI continues to gain traction. All right, Microsoft. Okay, ugly chart, but breakout still holding at this point in time. I would say as long as this as long as this 402 level holds, all right, we could see, a bounce or sideways, but again, the software names are very oversold. All right. And many of the software names are actually AI giants in the making. So I would say that in terms of like a sector that's lagging, not quite performed, the businesses are getting better, but the technicals are not showing yet. A lot of the software names, Amazon, Microsoft, ServiceNow, all right, all these are names which results are getting better, fundamentals are getting better, but again, technicals are not quite showing yet. So I would say that if I were to render a guess, after the semi and I would say AI infra names have completed their run, do expect that there might be some rotation into the software sector in the second half. All right. So again, I have a long bias on the software sector. I do think that we could see a rotation of fund flows into the software sector. It could be a major catch up place for the pod shops as they move into the second half of the year. All right. Now, let's go to ServiceNow. Again, this has been a huge AI native name. Breakout is still holding, as you can see. All right, very nicely holding over this breakout point, which we pointed out. And this was the breakout point we actually pointed out 2 weeks ago, or sorry, over a week ago, right, on Sunday. And it's moved up very nicely, and it's kind of maintained that gap. This is really very much in the early stages of what looks like a continued multi-week push higher. And right now we are in a consolidation from the looks of it. Okay, we look at some of the software names, CRM. So these big cap names, again, all these are available on the Veridium equities platform. All right, as you can see, still maintaining that very nice gap over the consolidation point from this base that has been building and still maintaining over that wedge. All right, so wouldn't get too overly bearish. I am hoping or expecting to see a bounce on Monday before a continuation of the sell-off. But even then, overall, from a big picture perspective, this is most likely a correction more than it is actually a change of trend towards a bearish sort of like structural bear market. All right, so just bearing that in mind. Having said that, okay, so let's open up to the floor now. Anything you guys, any markets you guys want me to cover, just put it in the chats and then I will start covering. All right, quantum, Q, BTS, cool, STX. Okay, QBTS. There has been a lot of news lately about the American government looking at supporting quantum. All right, now as you can see from this big chart, this was the euphoria phase, and then we had a huge sell down here. This was the point where I don't know if you guys know who Martin Scarelli is, but this was actually the point where he started shorting Quantum very aggressively and putting it all over his YouTube. And then he started getting margin called by JP Morgan around here. And then I don't know if he actually managed to see his positions through. But having said that, Quantum has had quite an epic run. All right. However, when you see this kind of structural damage move, all right, I would say be a little bit cautious of this bounce, okay, because this is more likely a corrective bounce than it is a change in trend or direction. Bear in mind that QBTS or D-Wave Quantum, as we know it, even they have like I think one quantum computer for rent, okay, that they rent out for an exorbitantly high price, and then they sold another one to some university or something like that, and it's a one-off sale. Having said that, let's give the stock a fair chance. All right. I don't know where this bottoms just yet, but let's say this has bottom around here. You may see $42. But if we actually change, let's do a few technicals. Okay, so if we just go by technicals for QBTS, technically, right, QBTS has enough in place to call this correction complete, just from a technical perspective. All right. So from a technical perspective, QBTS could be one of the leaders or technical leaders out from Monday if the broader market bounces. All right. But just bear in mind that QBTS is no longer in the micro cap or small cap category. It will, correlate a lot more to the S&P 500 and NASDAQ. All right. Having said that, let's move to Seagate. All right. So Seagate, similar to Micron. All right. Not much technical damage done here. I am bullish as long as this 715 level holds. Okay. Having said that, all right, we are getting quite close to this breakout point here at 822. All right. Monday comes again. I'm expecting a bounce. I think that between STX, SNDK, Micron, Micron has the stronger chart. So I would actually look at Micron for the bounce play, but STX should play out just quite nicely with regards to a bounce as well. And of course, it's always worth looking, for a 2x ETF, whether there is a 2F ETF available, all right, in the market. Well, when you trade the 2F ETFs, just bear in mind that you want to see continuous candles, all right? So you want to actually dial in if you're looking at 2F ETF plays for any name, all right? Dial into the 15-minute chart. And yeah, what you don't want to see are these kind of like lines here, all right? If you see these kind of lines here, it's an indication that the ETF doesn't have sufficient liquidity. And usually there are 2 or 3 ETFs available. As you can tell, there's STXL, all right? So just go there and see, okay, does this look a little bit better? All right, and then just check the liquidity. But again, when it comes to 2x long ETFs, what are the advantages? You can see STXL trades at $38, but STX itself, all right, trades at $833. All right, so psychologically, it might be easy for you to take long positions if you are actually bullish on the stock itself. All right, STX is available also on the Veridium equities platform, so do look at it. NVIDIA I've covered already. I'll cover Google now. So Google, all right, did a big raise. All right, but this is still a very bullish chart. All right, I know that on the overall, this was quite painful for some who were long. All right. Okay, but there are signs of a bottom here. All right. If let's say this doesn't turn out to be a change of trend or reversion back to the long side, the question then is, where could this go? All right. What's the upside here? Where would you start calling positions if you were looking at long positions? All right. I would say you'd be looking somewhere around this area here, the 380 level, to start calling some positions and then just trading a stop to break even if you are starting to go long the stock already. All right. But just bear in mind that that offering is weighing on Google. Having said that, Google is a long-term winner in the space with the TPUs. Okay. All right, let's cover dollar sing. All right, dollar sing. Okay. Just bear in mind that dollar sing doesn't move very much because it will trade within the near band. All right, but as you can see here, right, this is an inverse head and shoulders that has played out in dollar or starting to play out in dollar sing. And whilst I normally say that inverse head and shoulders can prove to be very nice patterns to trade, but for a currency pair like the dollar sing, right, just be wary that because it has to move within a near band, all right, because Singapore doesn't actually manage interest rate policy, we manage it via our currency. Um, that very often these head and shoulders patterns may not actually fully play out. Right now, the target, if it does play out, would be okay towards the 130 level thereabouts. All right. So maybe that becomes a nice place for you to start taking profits. Just be a bit light-footed when it comes to something like the dollar sing. All right. It is a very, 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 very managed currency, although free floating. All right, Palantir. Okay, this is very ugly. All right, and has come back right into the consolidation zone. We really don't want to see this, all right, break this 130 level. Having said that, if you talk about AI, Palantir is, well, as far as most people are concerned, still the leading AI company with regards to software, military grade. So I would just say, technically, even though fundamentally the reports are getting better, technically I would stay away from stay away from actually looking for long positions in Palantir. There are better names: ServiceNow, CRM, even Microsoft when it comes to the software sector. All right, just be a little bit cautious in terms of looking for longs in Palantir. But 130 is a key level for Palantir. Lots of options contracts there on the put side, so just be a little bit careful if you are looking for long positions in Palantir. But if you don't have any positions, I would stay away for now. Let the chart resolve itself. All right. Okay, so just be very careful when you're trading stuff like this. This is very gappy, all right, which means liquidity isn't great for this. Again, the whole idea of you trading the stock market or any liquid market is liquidity, all right? If you wanted stuff that's really illiquid, you would be doing private assets. But as we know, the problem with those assets are that you can never get the valuation that, or everyone says that they have this valuation, but no one can actually realize it. All right, this, from a technical standpoint, can bottom somewhere between this 76, 74 level and 73.50 level. So just around, let me just draw a box for you guys. All right, I know this is a big theme because of the AI and battery power play. Let's see. All right, this has been talked about a long time. It's very similar to the solar ETF 10. So just watch for bottomings around this level. But just be careful, all right? This is not a chart that makes a lot of people feel comfortable. Having said that, over the longer term, this could still move higher. Wouldn't play for a bounce on Monday. This is not a great liquid name to play a bounce in. Meta was hit quite hard because of the offering saying that they wanted to do the same thing as Google. All right, but having said that, they are quite, from a bigger term perspective, they are still off their lows. All right, and this is a consolidation chart. This will still move higher. But having said that, the news overhang of an offering isn't a great piece of news from a technical perspective. Whilst I'd say it is probably going to be an AI winner and you can start building long positions, I would say be a little bit careful if you are trying to play the bounce for this on Monday. All right. So again, for Palantir, again, key support here at 585, followed by 563. Okay, 585 was a previous breakout point last year. All right, so ideally, we don't want to see this 585 level broken again. All right, but if it breaks 520, be really, really careful. Then there is a big amount of downside. Again, Meta has announced its intention. It hasn't actually done the equity offering yet. All right, so the market may be saying, so what's the size? Okay, but how bad can it get? all right, we can actually just roughly see, depending, I mean, obviously, the offering would dictate how far down this moves, but if it got really bad, yeah, you could test this 530 to 545 level, this box here, all right? Not a great technically test here, and if it breaks through, um, maybe the 485 could be the next target. But this could be a potential target if, let's say, the offering is of a substantial size. So just bear in mind, if you're looking for long positions in Palantir, please be very, very careful. All right. Circle is having a rough time because of the entire crypto complex. But having said that, if interest rate cuts are off the table, do bear in mind that this is a name that actually benefits from no interest rate cuts. Having said that, it is quite tragic to see where it is, all right, or where it's come from this high here. But from a very big picture perspective, all right, this was a very significant bottom below here. And this is a very nice corrective pattern on the ABC front. Wouldn't play for a bounce on Monday, but structurally, all right, structurally, from a technical perspective, this has enough in place to say that a correction is completed. So it might be a bit weak because of, you know, obviously market factors. But 73, 77 is going to be a key level to watch for Circle. I am thinking that this has more or less come to a place where this might actually have bottom out already. All right, so this was actually the bottom out zone that I had in mind. Could it go a bit further? Maybe, but again, this is the name that benefits from high interest rates or higher interest rates or interest rates staying the same because all their securities and all of their income comes from securities that they actually buy with proceeds. All right. Now, anything related to crypto, coin, I wouldn't look at it. All right. The chart is absolutely ugly. I got the hood after this. Okay. This chart here in coin, all right, although it has a nice corrective pattern, just bear in mind that structurally, unlike Circle, which benefits from interest rates, this, all right, is a lot like the Bitcoin and ETH chart. All right. This is a pattern that or correction that has completed or looks like it has completed from a structural downtrend, ABC to the upside, and then now having a final move to the downside. Where this move ends, all right, it could go down towards the 130s or even the 100 level. So I would not be looking for long positions on this. In fact, all right, as long as if I play a crypto bounce, I would rather use BTC or ETH. But when I think that BTC and ETH are done with the bounce, I would look at actually shorting coin. All right. All right. Let's go to Hood. So Hood is interesting because of the removal of the PDT rule. All right. But Hood has, all right, a very nice basing pattern here, double bottom, you could call it. All right. I would say that as long as Hood stays above this 73 level and ideally the 80 level, all right, ideally above the 80 level from here, all right, that we could still see a push to the upside. Again, this thing has fundamental tailwinds behind it, but again, the crypto side is weighing on this, all right? So do be a little bit careful, but I am hoping that this starts to resolve and then starts to push back up to the upside here. All right, there is enough in place from here, from a technical pattern where you see an ABC, a B, and then this could be the end of the C, and then we could see a resolution or at least a move back towards the 110 level in the medium term. All right, but having said that, all right, if you are looking for playing a bounce on Monday, this is not an ideal stock to look at for playing a bounce. When it comes to bounces, do try to look at stuff that is bigger cap and liquid because these are the first to bounce. So your semis, these are the first to bounce, okay? As you can see, a Hood recently also on the 15-minute chart, not that much liquidity interest, not a lot of liquidity coming to the stock just yet. but it does have the PDT rule removal, which is actually very beneficial to the stock. All right, uranium. Okay, so this has been a theme for years. Let's see. Okay, cool. Loaded. Great. With regards to uranium, let's see where we are on the 15-minute. Wow, this is quite ugly. But yeah, I wouldn't look for a bounce on Monday. But in terms of the bigger structural picture, when we talk about looking further out, this does look like it has a base forming. Not a lot of confidence in this pattern just yet, but there may be a potential base forming in this, and this may be looking for a bounce around this level here, which is the 44.80 level. All right. Not a lot of confidence in looking for long positions, but the bias is to the long side. All right, but as of now, if we talk about short side stuff, I would be looking for short positions in crypto after the BTC and ETH bounce. All right, Marvell. Let's see. Chip sector, again, very positive news. This could be a name which the presidential or the US current administration takes a position in. This is a very strong chart. This is a very standard correction on the ABC side. This is a chart which, or this is a name which, if you were to play a bounce on Monday, this is one of the names you could play a bounce. There is enough waves in place for this to render a bounce. And as long as this does not break this 256 level, all right, do look for upside on Monday if this level holds. All right, so Marvell does have a lot of bullish technicals and fundamentals going for it, and it could be a name again which we see the administration taking a position in. All right, USAR, the chart. This is a company which the administration has a position in. All right, but there is no reason to get excited over the stock just yet. All right, I would not look for this to bounce on Monday, even though it might. Okay, I am looking for, as long as this 21 level holds and the 1850 level holds, I am still looking for a bias move to the upside over the medium term, so over the next couple of weeks or months, but not the first name I would go to if I am looking for long positions. Again, just a reminder, when it comes to positioning during a correction, look for the stuff that falls the least, because they are the first ones to go when the market actually resolves on the correction. All right. I know a lot of small cap names, so USAR, QBTS, so on and so forth. A lot of people, these were previous winners. They are not the current winners, and they don't look like they're setting up in terms of relative strength to be winners going forward. All right. So will they bounce? Yes. Are they going to be the leading stocks that you are used to seeing them? Be very, very careful. They don't look like they're going to be. They don't look like they're going to do that. Now, Oracle, I just want to note you guys to note that we have a very nice base here that has formed and has started to bounce. All right, or move higher. Again, they are in the same game that they basically supply AI compute. That's a big theme with CoreWeave, NBIS, all big winners. Again, you can see here, this has enough ways in place. This is a name you could look for a bounce on Monday, or over the next couple of weeks, do expect this name to push higher towards the 250s, 260s. Just remember, this stock was at $320, $330 just before a huge correction and sell down because of the scare of the credit default swaps. All right, so this has made a nice recovery. It does look like, similar to software names, it's starting to break out. It is part of the IGV ETF, which Microsoft ServiceNow are in, one of the larger weightings and components. And this is one of the better looking charts versus, say, something like a Palantir. All right, so again, this is supportive of the broader software bounce and theme, and likely rotation of fund flows in the second half again. All right, so a name that I wouldn't be bearish on, looking for bounce, looking for structural long positions in this name as well. Okay, So with that, I think we're done. Any other names or last names that you want to cover? If not, we are gonna close the session here, and then I'm gonna wish you guys all the best for your competition on Monday. Are there any other names, or that's it? All right, there are no other names. Okay, guys, all the best for the competition on Monday. Again, challenge accounts and funded accounts are up for uh, prize grabs. Please, uh, get in your pods. Just a reminder, 14 to 15 times the success when you're in a pod. All right. I want you guys to succeed. All right. We're not just we're not just hoping to get you guys to pay challenge fees and then you fail. All right. Like, no. I've actually instructed the risk side to watch the trades, and we actually want to make sure we copy and hedge your trades. All right. Yes, the daily reset is midnight Singapore time. Actually, no, sorry, it's New York close. Yeah, New York close. That's the daily reset. So 5 p.m. New York time. All right. All right. If not, I'll see you guys most likely on Thursday. Okay. For a short session. Let's hope we get that bounce early next week, and then we can see how to maneuver from there. All right. But just be a bit light. Trade a lot more spreads during this time, and see you guys on the other side. Hopefully, with you guys winning some of those prizes. All right. See ya.